What's good, people, traders, and dedicated gold chasers? Welcome back to another video at the Modern Day Trader with your boy Mossy. And today we're gonna run over the whole week and we're gonna do a recap. We're gonna look at the way I look at the markets in hindsight and just trying to account for perfect price action. Obviously, hindsight is always perfect price action. So buckle your seatbelts and let's go. Let's go. So firstly, when I start my analysis, I usually like to start on the 4H time frame every single time, just to get a note of where price action could potentially go for the next week or so, 3 to 4 days. I want to see what actually happens in the higher time frame. Bear in mind that when you day trading or you trade in a specific session, all you're doing is you trade in one specific 4H. So in that case, you don't necessarily need to know what's happening on an overall weekly basis. But I think it's just good to know where your higher time frame points of interest are and where price action could potentially go if it does respect your point of interest. So that's why I like to take an overview on the week on my pair and just know what price action could potentially do when it gets into these higher time frame points of interest or these high time frame areas of rejection, whatever you want to call them, demand zones, supply zones, key levels, whatever you really want to call them, doesn't really matter. But you just want to know from a higher time frame perspective, if price action does get into here, there's a high chance that it might bounce, and if it does break, there's a high chance that now price action is actually shifting structure and we can see price moving in an opposite direction, right? So without further ado, let's jump straight into the chart. So as you guys can see, I've marked this red line. That's just because I wanted to denote where this past week could have started. And so everything to your right hand side is this past week from Monday through Friday. Everything to your left hand side is what you would have had, or the price action you would have had coming to the charts on Sunday, for instance. So you would have had an opportunity to analyze and predict, or just have an anticipation market flow, or just anticipation of market structure to where it could potentially go to. So this is what I was looking at coming into the charts on Sunday, right? So you can clearly see that I had this low consolidation marked out. You can see the price action had actually push to the upside out of this consolidation. We had a push to the upside, signifying potential bullish movement to the upside. Then what you can see is that this was actually a fake out or a breakout, break back in, liquidity grab, whatever you want to call it. We grabbed all of this liquidity right here, mitigating orders and fulfilling orders in these areas right here. And then you can see a push off to continue this small internal downside structure, right? So we had internal downside structure back into this uh demand zone or key level, whatever you want to call it. I just say point of interest because it's a point of interest where you're potentially looking for trades out of that area. So then what you can see is that once we hit this 4H point of interest in this area, we then had a huge push or displacement to the upside. Once we saw that displacement to the upside, we saw the price action had actually broke that area. We have actually broken these areas. So we broke multiple levels to the upside, multiple areas of, let me call them holes. I don't want to say resistance, multiple holes that were holding structure to multiple areas that were holding structure from essentially pushing bullish again and keeping them bearish, right? So we had those areas right there, and then price action had actually broken structure to the back end of to the first week of March. You can then see that price action had actually come back and mitigated orders right here. We then see another bullish shift of structure right there, and let me actually mark it out because these are the key levels for me going into this past week. So we had a break of structure to the upside right here, and then what we then had was this being our new higher low on, like, coming into this week from a 4H perspective. So we have our new trading range. Essentially, our new trading range are these areas, that low that I just denoted, and this high right here. This is our new trading range. And the trading range is simply the most recent higher low and the most recent higher high in uptrend, right? From this, now I can then start to mark where my point of interest is. And simply what I do is I look for imbalance or fair value gaps, and then I look for a big push to the upside or a big impulsive push to the downside. And that last candle will then be my point of interest. The last candle in the opposite direction will be my point of interest. So with that being said, this was my point of interest. Just anticipating that when price action come into here, there is potential. This is the important thing. There's potential that we will push out of this area into the high of the trading range, for instance, into these areas here. So potential, and the reason why I say potential is that price action can break out of here, but when you see the reaction to it on the lower time frames, what you can then start to anticipate is, okay, we are respecting the higher time frame point of interest. We can now anticipate that now we put in multiple confluences together, we can anticipate that price action will move in our anticipated direction. So with that being said, we have these areas here. So obviously Monday did not occur yet. We have our areas plotted. We know where our higher time frame targets are, which are equal highs essentially. We know where price action could be magnetized to, which is the point of interest marked in the gray zone. And now what we're going to do is we're simply going to go down time frames to now see how we would have actually anticipated moves in our day, like in our session basically. Firstly, what I like to do sometimes is I like to, or not sometimes, all the time, I like to leave the gray area just to mark what the 4H does. What I then do is I come down to the 1H and I mark with a dotted line. I mark where my 1H point of interest actually is, or where my 1H fair value gap closes, right? So now I know if we do tap into that, we fulfill the 1H too. So we can come into the 4H and not fulfill the 1H, and I'm fine with that as long as I see 15-minute structural breaks to in the anticipated direction. Then you can then continue to trade. So I just want to mention that we mark that down. Now you jump on the 15-minute. From the 15-minute, essentially what I like to do, I like to use this session, the session indicator, because it essentially just shows me Tokyo session and London session. That's what it essentially does, right? I want to see an impulsive push in, or an impulsive move in Tokyo, and then anticipate that there will be a little bit of a retracement in London with the push too. So early London, a retrace, and then an impulsive push in London too, right? So with that being said, now we're coming into, we are only trading London session. So all the blue areas, that's what we're looking for trades. We don't like to trade in London coming out of a consolidation in Tokyo, right? So when we step into the markets on Monday, what you can see is that there's no clear impulse in Tokyo. There's no clear movement in Tokyo or in Asian session. So now what I'm going to do is I'm going to step away from the market. I'm not going to be trading on Monday, even though we had this big impulsive push to the downside. Now looking at it hindsight, how could I have traded this? I guess like you can say that this is a key area on the 15-minute, or point of interest on the 15-minute. You can see multiple rejections on the 15-minute, and then you see the impulsive push to the downside, which is into our area of magnetization, where we expecting a rejection from, right? So you could have anticipated that, listen, the weekly will probably form its wick Monday, Tuesday, and then we'll get the impulsive push or the body being made Wednesday, Thursday, Friday, right? That's what we could have anticipated. But unfortunately, no anticipation of trades on Monday, just because of the way Tokyo had formed. Now we're coming to Tuesday, right? And we can clearly see now that we are on the 15-minute, we are forming internal downside structure. Bear in mind that the 4H we are anticipating from this area of magnetization, from this point of interest, we are anticipating the price action will essentially reject. And since we're anticipating that, all we need to know is that more likely than not, on the 15-minute, price action will start to form downside structure. And once price action actually bounces out of this magnetized area and flips downside structure into bullish structure, we can start to anticipate the price action will bounce out of these areas. So now it's perfect because we have multiple confluences in this area of magnetization. You can see that we are within this 4H area. We then actually tap the 1H We closed the 1H fair value gap. And now what you can see is that all along these areas here, price action was actually forming 15-minute structure. So you can see there's a low, there's a lower high, there's a lower low, lower high. And then I wouldn't call this a lower low just yet, just because it's only wicks. You see there's a new lower low from that lower high. We have a lower high and then anticipation or an actual lower low. And then what you can see, once we had actually tapped these areas in Asian session, we had an impulsive push to the upside, which is one of the key characteristics that we're looking for in our moves before we can anticipate what London is actually going to do. You can see we had an impulsive push, breaking structure there, right there, pull back, sorry, we have a pullback, and then we have a new push to the upside, right? And this is all before my actual time that I can trade. So now what you can see is we have an impulse in Asia, right, into pre-London. We have structure being formed. We have multiple breaks of structure. So here's our first break of structure, template break of structure to the upside. We have our second break of structure to the upside. And now what we can do is we can actually anticipate that price action will continue to the upside. What is our entry? Our entry is a 61.8 fib. So let me pull it from our most recent structural higher low to our most recent structural higher high. And I actually missed this trade just because I'm gonna be honest with you guys. I wasn't looking at the charts early in the week. There was a trade that I anticipated on Thursday that we will get into that I actually just missed. You would have placed your buy limit in and around these areas. You pull your stop loss all the way till the lows. You can see that's 29.5. You add 2 pips to that, so that would be 32 pips if you round it up, and then you just take this all the way to your next target area for 1 to 3 on the, so this will make 16. This would be 32, and then this would be 960. Now the good thing about these types of trades is that when you're trading out of a higher time frame magnetized area and you know where your potential targets are, you can essentially target these highs from a higher time frame perspective. Now I personally don't do that, and it's something that I actually have to look into over the past 3 months as to what exactly how it plays out when I do have a 4H magnetized or point of interest area where price action taps into. We then start to shift structure. Can I then target the 4H previous highs to create equal highs to the upside, which you can see actually happened this week, and that would have been a potential 9R trade. However, the plan right now is just saying that, listen, you need to target, essentially, if you have higher time frame structure on your side, you need to target a 1 to 3, and that 1 to 3 is usually slightly under the 0.618% fib where we have our extensions on the fib. That would have been a clean trade, almost zero drawdown. You can see that this just this candlestick formation is too clean. Price action was forming clean structure, and that's what we can anticipate is that price action would have moved. Potential 9R trade on this one. Unfortunately, we didn't actually take the trade. Let me just take a sip of wine. Let's move on to Wednesday. Coming into Wednesday, as I mentioned before, in Tokyo, you don't really want to be, or in London session, you don't want to be trading if Tokyo was in a consolidation or in a range. And unfortunately, Tokyo in this time was in a range. You can clearly see that we were tapped between these areas right here. So we have this high, and then we have this low areas that were like really tapped. We didn't move out of those areas. And I personally don't trade Asian ranges. I don't like it. There's a lot of manipulation. If you have an Asian range, there's a chance that it might push to the upside, then it might manipulate to the downside, inducing both buyers and sellers. And then you see the actual move, which to me is just a bit too much anticipation, too much decision making at this current moment in time. For now, we're just keeping it simple. We're keeping it clean, and we're just trying to move with what structure actually moves. So we come out of this, we getting into Thursday. We need to just analyze what happened on Wednesday. What you can now see is a higher high, higher low, higher high, higher low, higher high, higher low, and then a higher high being formed. So we're clearly in a bullish structure. Our last known higher low being these areas. And then going into late New York Wednesday, what you can see is we have a bearish push to the downside, actually shift in 15-minute structures. You can also note that we did hit those equal highs on the higher time frame. So now there's a high chance that price action might actually start retracing from a higher time frame perspective, being the 4H. So you can now start to put together a new picture since we had actually hit those targets that we anticipated. You can then see that for the late session on Wednesday into early Asia, on Thursday, there's a range that happens, a consolidation, before price action actually impulsively pushes to the downside. Now, this is the one that I was watching when I got to the charts on Thursday, right? I was watching it just because we had a clean impulsive push to the downside, and all I'm anticipating in London session is for retracement for then it to continue into the downside liquidity and potentially mitigate those orders to the downside. So what do? I basically place my fib from these highs to these lows, and I'm anticipating that price action will trigger me in of before the last 15 minutes of this 4H candle. So that means essentially before 10:45. And as you guys can see, my sell limit would have been placed in around these areas. And I would have had a 47, 48 pip stop with potential 1 to 3 areas being targeted. 1 to 3, 1 to 3, 1 to 3. There we go. Now what you guys can see is that we actually didn't trigger. So once we come into the last 15 minutes of the candle, I usually delete my order, and it just is what it is. It is what it is. We didn't get triggered, unfortunately. There's nothing you can do about it. Like, it just is what it is. I had this sell limit placed on MetaTrader 5, but it just didn't happen for me. It is what it is. Would have been a good trade, potential 2 odd on the cards with potential partials to be taken, but unfortunately didn't happen. Coming into Friday, what you can see is the Friday was pretty flat, really and truly. There was no potential trades in on Friday because this didn't hit our 61.8 fib level. We didn't even come into a 15-minute point of interest. And yeah, guys, that's the way I essentially wrap up the week. And I have a high level hindsight view of what happens and how I stay up to date in the markets. So with that being said, guys, I hope that you guys will take this exercise as advice and run through it with your own strategy. Sit day to day, walking through price action and actually like explaining to yourself what is going on in the moment. So then when it actually happens in real time, you know exactly what you need to do in order to execute and not feel like nervous about the trade, not feel any emotions about the trade, but understanding that you've actually executed on your plan. And guys, just remember, how you do one thing is how you do everything. And so, with that being said, from your boy Marcy at the Modern Trader, please don't forget that your unmatched perspicacity coupled with your sheer indefatigability makes you a feared opponent in any realm of human endeavor. Have a profitable week, have a productive week, and don't let yourself down. Do the work that you need to do and do it consistently. Peace out, man.